Welcome to the Daily Update. This is being prepared Monday, May 16th, where we'll look at the action in the market today and then see how things look for Tuesday, May 17th. And it was really a day that kind of lacked conviction. We were down, but not significantly. We spent some time below the unchanged level. We spent some time above the unchanged level. Nothing really was decided in the day. However, it has given some of our indicators a chance to show some improvement. So it does look like the technical picture is still trying to improve. Eventually, we're going to have to see some kind of follow through if things are really going to shift from a negative environment into a positive environment. Going back on what happened at the open, we did have a lower open. Prices were negative, but they never reached all the way down to S1, which was at about 39.79. As the day went on, prices bounced above S1 and the daily pivot and then back up to the unchanged level, and that pretty much acted as resistance for a while. Prices eventually went positive, but that didn't last for very long. Going into the close, we saw some late day selling, which took prices back negative again, and we ended up being down 0.39%. Not a real big day. Volume was below average and declining. That's one thing to keep an eye on. We saw a decline in volume on Friday with the big up move. Well, Monday's volume was even below Friday's volume. What we're looking at, the technicals are negative. We've kind of worked off some of the oversold conditions, at least on a short-term basis. Inflation and interest rates are what the market is really fixated on. We have a number of geopolitical concerns, as well as earnings reports as they are released. So what are some comments that we can make? The VIX declined on a down day. That's kind of interesting. We were noticing some things late last week with the VIX, and then we saw the big up day on Friday. Well, even with the decline that happened on Monday, the VIX continues to decline. That just shows that hedging is coming off. And so that might be a little bit positive for the markets. Now, we could have a really strong down move and the VIX could really spike up and take that off the table. But it is something that we've seen over the last few days. Gas is spiking, which you're probably feeling at the pump, as well as heating oil. It's just going up. Wheat, because the India exports have been banned for right now, and corn, they're all rising. So these are all inflation issues, and I have some charts that I'll show of that. Oil is rising as China, specifically Shanghai, looks like they may be trying to phase out the lockdowns that they're having. And because their economy in their biggest city is getting back to work, or could potentially be getting back to work, that may increase the demand for oil, and oil prices are going up because of that. The US dollar and the euro are right about even. The dollar had been a little bit above the euro. Well, now the dollar is just a little bit below the euro, but they're just at about the same level. The S&P was down, but the technicals continue to show improvement. And there will be a speech that Fed Chair Powell is going to be giving on Tuesday, so the markets will be in tune with that to see if they can read any secret meaning into what he says. Fear is unchanged from Friday and still very extreme. Even though it improved from Thursday to Friday last week, it's still the same as it was on Friday. The S&P continues to be in correction territory. There wasn't a real significant amount of economic reports. We had the Empire State report came out, which was weaker than expected, showing a little bit of weakness in the New York area, but nothing that really impacted the markets as a whole. Our trend continues to be negative. It flattened out a little bit, but we're above the moving average, so we count that as strengthening. The bias is negative with the down day and the recent down days that we've seen. That also feeds over into the momentum, which, except for Friday, we still have had pretty much negative momentum. Let's go back and look at the day's session sentiment. We're still at extreme fear right now with a reading of 12, which was the reading on Friday. Here's the historical chart to show where we're at, and this could spark some kind of bounce. The problem that we see with this is a lot of times greed can go on for a long time. It may not spike up, although it can, at times. Typically with fear, we see a whole lot of fear happening at once and then we bounce up out of that. Well, we've been pretty extreme now for a few days and we're not seeing a real bounce. We saw Friday's bounce, but we didn't really see any follow through on Monday. Can this camp out at this level for a long period of time? If you look back at other extreme readings, you see where there's a real V shape after that, where we're kind of trailing off being extreme right now. Just something to be aware of. The VIX declined even on a down day. See the line chart. So on a closing basis, we declined and we're below 30. And then on the bar chart, we also closed right about at the low, but we're still above the moving average. The VIX of the VIX also declined. It just shows the VIX is really slowing down. Here's the bar chart, and we're really declining based on a closing basis with the line chart. The Ulcer Index continues to advance, though, so that's just showing that there's an increase in fear. And here's a longer-term view of the Ulcer Index. This, I'm not quite sure what to make of how this information is released. I think it has something to do with stockcharts.com. Suddenly, this chart was updated, and it shows the RIDEX bear to bull ratio. It's just suggesting that more of the RIDEX mutual fund investors are in bearish funds than they are in bullish funds right now, and that climbed over the last week. The equity put call ratio actually declined. So we had a down day, and the VIX declined, and the puts to calls declined. Interesting. We're also seeing a decline in the 5-period moving average of the put-call ratio, but it's still a pretty high reading overall. The Economic Policy Uncertainty Index. When this is going up, that means there's a lot of uncertainty. And you can see other times when we've had real spikes in that. It was spiking up, but the latest reading shows it declining. So it's not necessarily extreme uncertainty. I mean, it sounds like an oxymoron there. Another one is the market-related economic uncertainty index is actually declining right now. As far as inflation, here's corn just going up. It hasn't hit a new high, at least compared to what happened a few years ago, back in 2012, but it is getting pretty high. Wheat is also going up and not exceeded the high set during the financial crunch. Gas is really starting to go up and is spiking. And heating oil, although it's not spiking up and hitting an extreme high, it is increasing. The sectors, we had the discretionary down the most. They were down over 2%. The other sectors that were negative were down less than 1%. We also had a few sectors that were up, with energy leading the way. And here's a look at the sectors since the all-time high. Shows energy and utilities positive. Staples are slightly positive. Way over on the negative side, we have discretionary, communication, tech, and the financials, and real estate, and even industrials. A lot of these are double-digit negatives since the all-time high. Technical alerts, not a whole big long list like we saw last time. The negative one for the S&P was that we crossed below 4,000. The communication sector actually crossed above 20 with the BPI. That's giving an extreme negative reading. So that's oversold. That could be positive. Intraday, we did have a lower open. There really wasn't much of a gap. And we went down, not even making it to S1. We came back up to the unchanged level, fell back a little bit, back up to the unchanged level, fell a little bit, finally broke through the unchanged level, never even made it up to R1, then saw some late day selling. We're down just slightly on the day. So when you look at this price action compared to all this other craziness that we've seen recently, it was a pretty calm day. The long-term support is still above current prices where we're at right now. And looking down at volume, you can see Friday with the green bar, since we were up, that declined. Well, Monday's volume was even lower than that. We're down 16.44% from the all-time high. Technical overview, no changes here if you've been watching these videos every day. The things that are positive remain positive, so I'll just list those off here. We go to negative, the things that were negative remain negative. And that includes pretty much all of the stock indexes, a lot of the sectors, bond prices, the usual suspects that have been getting hit continue to get hit. Even if they've shown some improvement, they're still in downtrends overall and on a relative basis compared to the S&P. As far as our trend, we saw a decrease in selling, a little bit flat to slightly down with buying, but the ADX continues to be above 20 and is still above the moving average. The Arun showed a little bit of decrease in selling, pretty much flat with buying, so we turned up just slightly with the oscillator, but it's still extreme negative right now. Breadth, this shows that we had a decline based on price and on volume, but not necessarily significant, but it's still negative overall, and we are still below the moving averages. New highs, new lows. Not as extreme as it was. We're back more to the midpoint right now where we're showing a +3. And this dark line here is just the zero line between positive and negative. So this is pretty much back to neutral. The 10-day average is still extreme even though we saw a bit of an improvement. Advanced decline ratio didn't really move all that much. It was down slightly, but it's still negative overall because we're below zero. New highs, new lows, we're starting to kind of turn up. Moving average is really trying to show some improvement, and the 10-day moving average is also continuing to bounce. So maybe we got extreme with the new lows, and we might be seeing some kind of a bounce from that. But we're going to have to see price follow through to the upside eventually. Accumulation distribution. See, we're not just seeing that right now. We actually declined, and we're below the moving average. Short term, McClellan oscillator declined a little bit and is below zero, so that is negative. Force index bounced up slightly with the red display on the chart right here. Stochc RSI still below 0.5, declined a little bit after being extreme negative, but it's still kind of negative overall because we've worked off this oversold condition, but we're not seeing a lot of follow through. Kind of the same thing with the Williams %R. The moving average study was still showing some improvement from the 20 after being extreme negative, as well as the 50, and we're kind of flat with the 200, but it's trying to improve. Stochastics down a little bit short term, but trying to come off of an extreme negative reading. Intermediate term showing some improvement, trying to turn up with the longer term. Stochastics. Some of our other charts, the rate of change going back 20 periods, we are still extreme negative. Standard deviation, we're still pretty far away from the standard price, and it was flat on Monday. The momentum oscillator slope is trying to show some improvement. The MACD is kind of trying to turn up, but all of our other oscillators, they're showing some improvement. The PMO and the TSI, they're trying to turn up as well, but nothing has crossed positive yet. Vortex, flat based on selling, a little bit of an increase based on buying, but still negative overall. The Sean trend meter still continues to be extreme negative. The Swinland trading oscillator based on price is showing a bit of improvement as well as with volume. And this has been pretty helpful lately. When we get into these choppy environments like we've been in, this indicator seems to do a pretty good job. It's when we're in the longer term trends, this chart can give us some really crazy signals sometimes. BPI is coming up out of an extreme negative reading. The PMO, here, as I showed on the other chart, it's trying to turn up a little bit, showing a little bit of improvement based on price and volume, but still negative overall. The PMO study declined a little bit with those PMOs that are rising. The buy signals trying to come up from an extreme negative reading and flat to slightly down with those PMOs that are above zero. Here's another thing that could be positive. We're still declining with the summation index based on price, but we're starting to turn up based on volume. Sometimes this can be a leading indicator. The boom indicator, we're still extreme negative, even though it bounced up a little bit looking at the 50. 200 period moving average, we bounced a little bit, but we're still decidedly negative. Chaikin oscillator trying to eke out a positive reading, but we're still below zero. Ease of movement is also showing some improvement. The TTM squeeze showing a little bit of improvement on Monday, and then the longer term oscillator still shows that we're pretty extreme. Different charts, Heiken Ashi looking a little more positive. We have a couple of open candles here. That's really the only chart. The Elder Impulse system is still neutral with the S&P as well as the SPY. We're still negative with the SAR system because the dots are on top. We're still in purple rain with the go, no-go system, which is negative. Longer term, we're below the long-term moving average. The 50-period moving average is trying to bounce up after being very extreme. 150, a little bit of improvement. 200, a little bit of improvement. Rate of change, we are negative because we're below this dashed line. And here's a longer-term view going all the way back to 1980 to give you some historical perspective. The special K continues to decline. Looking at the broad market, the diamonds are still neutral. The Qs are still neutral. The Vixen is also showing a decline based on the bar chart, and we declined a little bit with the line chart. But we're still pretty high with this indicator overall. Then I moved the place of this because this US 5MA, this takes the American Stock Exchange, the NASDAQ, and the entire NYSE together, and then comes up with what is the moving average of the highs and lows over 5 days. So we get a really broad measure with this indicator, and we had been really extreme down here at minus 12,000. Well, now we're at only 8,500 negative. So it's showing that we are extreme, but there is some improvement on a really broad basis. Also, the dollar, it declined after having a really nice run up recently. Oil is also going back up. It's up at 114.20 now. Gold was up a little bit, but continues to be below the moving average on the futures chart, as well as with the ETF. And here's a longer term view below the moving average. Silver was up 2.63%, but way below the moving averages here. And then here's the longer term SLV chart. Bitcoin just continues to hang out. Right now, it's a little bit above 30. It spent a lot of yesterday and today below 30. And people are just kind of, oh my gosh, my dreams have become nightmares, as a lot of people that just figured naturally this was going to go higher, only to see it really breaking down. Are we going to be able to establish some support right here and then bounce up higher? We're not really breaking down with real conviction or speed right now. Is that what's going to happen? Bonds. We bounced a little bit based on price, but we're still very, very negative. The 30-year yield is still dancing around the 50% retracement with the Fibonacci. We're slightly below that level at 3.09% with the 30-year. Interest rates fell pretty much across the board when you're looking at the longer term maturities, but we saw an advance in the yield with the 3-month. Japanese yen bounced a little bit, but still declining. The euro, same thing, bounced a little bit, but declining. The dollar declined a little bit and is in a pretty solid uptrend. Here's the euro against the US dollar index, where the euro's at 104.35, the dollar's at 104.20. So they're kind of close to each other. Our possible positive scenarios. Nothing has triggered yet, but the Copic curve is starting to turn up. And here's a longer term look at that same chart. The 2-year Treasury yield, has it spiked? It fell a little bit, but we don't really know right now. And stocks have not really started to take off. But we want to keep an eye on this. The mass index is still coming down a little bit, but has not generated a signal at 26.5. Our Pring bottom fisher trying to turn up, but still has a ways to go for it to cross this moving average. So what's our outlook then for Tuesday? The technicals are negative, but may be improving. How many times have I said that now? The markets have broken below the trendless range. We're in danger. We're not really in a very good-looking environment right now. The growth and value battle continues. Friday, growth won out. Well, on Monday, value pretty much won out again. The economic reports coming out on Tuesday are retail sales. That's pretty big, of course. Industrial production and capacity utilization. That can be big as far as inflation. The other one, the housing market index and business inventories, are helpful, but not necessarily market moving. Geopolitical events, Russia, Ukraine. Apparently, Finland is going to join NATO, and Russia doesn't like that and said they will retaliate if that happens. That may escalate things. China with the supply chain, they might be starting to lessen their lockdowns, but then I read another report that there's some outbreaks in other areas in China, so they may be more aggressive with their lockdowns in other parts of the country. Inflation and interest rates are still what the markets are fixated on. Retail sales is probably going to be a biggie for Tuesday. Oil, we have to watch that. Earnings, Fed speak, Chairman Powell's giving a speech. The longer-term development that's happening in Japan, they've had a multi-decade problem. They're really lowering their interest rates, and eventually they might have to start selling U.S. treasuries because they own a lot of those. They're the biggest owner after the Fed. They even own more than China. And if they really have to start selling those, what's that going to do to interest rates? Because when you sell bonds, prices go down, which means interest rates go up. So our scenario, we're still in a down scenario overall with rising interest rates and inflation fears. We saw a lot of decoupling last week where interest rates and stock prices were going in the same direction. We were a little more varied since we saw more of a mixed picture on Monday. Earnings and Fed speak can, in this case, spook the markets. It can also be positive. Technicals are negative. Okay, just to show improvement. Up. Are we seeing some improving technicals? But sentiment is still extreme negative or fear. Possible positive scenarios, they're not happening yet, but they might be setting up. As far as the technicals, some pivot points and previous levels may provide either support or resistance. We are not sideways because the ADX is above 20. It's not really strengthening. It's kind of flattened out right now, but it's above the moving average and it's showing a negative trend. So our conclusion is the S&P is negative. Short term, negative, but might be improving. Intermediate term might be improving. And long term, we're still negative as long as we remain below the 200-day simple moving average. All right, so thank you. Have a very good Tuesday, and I'll prepare the next video after Tuesday's session.